Don't do this because it will ruin your credit score. If you ever talk about buying a place or get a new credit card with your friends and family, then it's likely credit score has come up into conversation. But what exactly is a credit score? So in today's video, you will learn all about your credit score and what you can do to improve it, so when it comes to take out a mortgage or a loan, you'll be in a good position to get approved and at lower rates. Hey, welcome back, this is Thomas. A credit score seems to be one of those things that everybody has heard about, but nobody really knows how it works. It is generally a 3-digit number assigned to you. It's used by credit lenders such as banks, credit card companies, car dealerships to determine how much of a risk you are and whether you will likely pay back your loan on time. There are different credit score ranges, but in Canada, the 3 most popular models use a score between 300 and 850. So how are credit scores calculated? Credit scores are calculated using information in your credit reports, including your payment history, the amount of debt that you have, and the length of your credit history. Some credit scores also use other data such as income and types of credit that you're using. Higher scores means that you have demonstrated responsible credit behavior in the past, which may make potential lenders and creditors more confident when evaluating a request for credit. Credit bureaus have different methods of rating your credit, but this is generally the range. Let's say 300 to 579 is considered a poor rating and you should actively try to improve it. 580 to 669 is okay, while 670 to 740 is considered good. Anything from 740 to 799 is very good, and anything above is excellent. So why should anybody care about getting a high credit score? Simply put, those with high credit scores generally receive more favorable credit terms, which may translate it into lower interest rates because the bank believes you are less likely to skip a payment. And if your credit score is poor, then you may not be able to get a loan at all, or the bank may not give you a mortgage or one with terrible interest rates. Remember though, that everyone's financial and credit situation is different. Different lenders may also have different criteria when it comes to granting credit. And the types of credit scores used by lenders and creditors may vary based on their industry. For example, if you're buying a car, an auto lender may use a credit score that places more emphasis on your payment history when it comes to auto loans, or a bank will look more closely at your income and income potential. In Canada, there are pretty much 2 main credit bureaus, Equifax and TransUnion. There are plenty of other credit bureaus like Borrowell, but almost all credit scores are based on the 2 agencies. I usually like to use Borrowell first because it's free and usually it gives me the information that I want. But if there is something that I'm not sure of, then I will pay for Equifax and I can call to make a change. So I suggest if you never checked your credit score before, I highly recommend that just pay a small fee and get to know yourself a little bit more. Or simply use Borrowell to get one, because this is a soft check, and if you don't check it frequently, it will not hurt your credit score at all. This doesn't only allow you to see if your score needs improvement, but will catch any fraud sooner in case somebody has stolen your identity. And lastly, it can help you catch any error. Errors are rare, but they do happen if there are mistakes on your credit score and you can be turned down for loans or mortgage. A couple years ago, I met with a client and he said he paid everything on time, never skipped a payment, but he always said he has a low credit score. Like when he checked his Borrowell, it shows 580. So when further investigated, we realized what the problem is. Somehow his middle name is mixed with his brother, who is a little more careless on his debt payments. So therefore, my client have to call Equifax to fix it. So next question is how to obtain the report from the agencies. And it's quite simple actually, but you might need a few things handy. Nowadays, you usually go online, take Equifax for example. After you log in, punch in your personal information, you just need to answer a couple of questions to confirm your identity. For example, what's your previous cell phone number? Or a couple years ago, you have a line of credit, but which bank you have? To me, it's more like a memory test. It's also important to note that the law limits who has access to your credit score. Not just anybody can access your credit score. Most of the time, you have to grant permission for institutions to access to your credit score. However, it's important to know that it's not always explicitly obvious when you're granting an organization permission to view your credit data. For example, the terms and conditions of a credit card offer will include language that authorizes the credit card company to pull your credit reports, not only in conjunction with making an approval decision, but also on an ongoing basis for the length of the tenure as a customer. When you submit a credit card application, you're effectively agreeing to this stipulation whether you notice them ahead of time or not. Alright, so how can you increase the credit score to give you more favorable rates? Well, you're in luck because I'm going to give you a step-by-step approach to help you improve your credit score. The first step is an obvious one, but also important. Don't miss payments. Your payment history is one of the most important factors in determining your credit scores. If you have a long history of on-time payments, it can help you achieve excellent credit scores. To do this, you'll need to make sure you don't miss any loan or credit card payments by more than 29 days. Payments that are at least 30 days late can be reported to the credit bureaus and hurt your credit scores. Now, it can be easy to forget or miss the notice, especially with everything digital these days. The easiest way to avoid late payments is to set up automatic payments, and please don't set up the minimum payment option, otherwise you have to pay 20% interest on the bill. If you're having trouble affording the bill, reach out to your credit card company or the debt specialist right away to try and discuss the hardship option. The next step is also pretty straightforward, and that is to catch up any past due payments. While a late payment can remain on your credit report for up to 7 years, having all your accounts current can be good for your scores. Additionally, it stops further late payments from being added to your credit history, as well as additional late fees. The next step is to build your credit file. A credit file is the records that credit bureaus keep on you. When you open new credit accounts such as a new bank account, credit card, line of credit, and so on, they will report it to the major credit bureaus. Having access to credit is an important first step in building your credit score. You can't start building good track record until you have credit in your name. Remember to always pay back what you owe on time. This shows you're responsible with your credit, and such you will likely get a high score. However, a word of warning, the credit bureau don't like it when you apply for too much credit all at once. I know I said you need for credit, but as a general rule, you should only have one of each type of credit. So say one credit card, one personal loan, one line of credit, for example. If you apply for 3 new credit cards in a short period of time, they will likely raise some flags. One exception is when you are rate shopping for certain types of loans such as a car loan or mortgage. Credit scoring models recognize that rate shopping isn't risky behavior and might ignore some inquiries if they occur within the span of a couple weeks. Now, if you're watching this and you feel like you have a bad credit score, don't worry, you can rebuild your credit score over time. How long it takes to increase your credit score depends on what's hurting your credit and the steps you're taking to rebuild it. For instance, if your score takes a hit after a single missed payment, it may not take too long to rebuild it by bringing your accounts current and continuing to make on-time payments. However, if you miss payments on multiple accounts and you fall over 90 days behind before catching up, it will likely take longer to recover. This effect can be even more exaggerated if your late payments results in repossessions, foreclosure, or even file for bankruptcy. It will take years to recover. Lastly, there are 2 usual misconceptions that I see. One being the credit score itself is just a number. More importantly, how it combines with the credit history. For example, an 18 years old who just finished school can easily have 800 credit score because they never own anything in their life. So compared to a 40-year-old person with a lower credit score like 680 but has 10 years of credit history, the bank is more in favor. The other misconception is a lot of people thought as long as they don't max out their credit card, they should have a good rating. However, it also depends on your credit limit usage. Credit experts recommend the credit utilization rate is below 30 to 50%. In general, if you spend $5,000 on one single credit card of $10,000 limit, it looks way better than you spend $5,000 on 5 different credit cards with a $1,000 limit. So the take-home message for you is to pay your bills on time, avoid those shopper credit cards, and check your credit score at least once every 2 years. So let me know if you have any questions about your credit scores in the comment section below. Hey, thanks for watching. This is Thomas, and I will see you in the next video.